what in the world is going on? The exciting thing is that we're writing history. These are the stories of GameStop and so on. These are the stories that people will be telling in 30 or 40 years, like we tell stories about 2000 and even 1929. These are breaking new ground. And everyone has their favorite example. My favorite was QuantumScape, because 7 years ago, we made a very substantial investment because our foundation tries to invest in stuff that will change the world in a way that will help it decarbonize industry. And nothing could do that better than an improved battery. And QuantumScape has spent the last 10 years working on a solid-state battery that will be half the weight, half the volume. So it has twice the power-to-weight ratio, which means instead of having 1,000 pounds of battery in a Model 3 Tesla, which I own, a wonderful machine, incidentally, it would be suddenly weighing 500 pounds. So you'd get rid of 500 pounds of absolute dead weight. And then in addition, solid state doesn't heat up. So you save 200 or 300 or 400 pounds of cooling equipment that goes with the battery in a Tesla. So now you're talking 700 or 800 pounds of complete saving. You're simply going to perform better before you even get to the battery. And then the danger of breaking into flame disappears to practically zero, which is pretty handy in a car, because even if 1 in 1,000 crashes starts to burn away, that's a public relations disaster. And it can be reassembled to recycle more easily than prior batteries. And it will charge in somewhere between 8 and 12 minutes, probably, in the end. So it was a wonderful set of objectives. And 7 years later, they have done it on a lab basis. And now they're faced with another 4 years, which is a long time to wait. Another 4 years before they get it rolling along the production line. And they did a SPAC deal. And I'd already committed myself to saying that SPACs were a ludicrous speculative instrument. So that was the great irony, because this was about the biggest investment that we had ever made. When it came at 10, it was a very respectable 4 times our investment. So it was already significant to us, but it spent the midsummer working its way, or late summer working its way to 25 or so. And then when they got approval, which should have been worth nothing because they always get approval, it exploded to 40 and then kept going and took another couple of weeks or so to get to 110. And at 110, it was a 50% increment to the foundation plus any of my own money added together. So it had become absolutely massive, but couldn't be sold until May the 1st. So that brings up the second great irony, is that I was writing about the bubble forming and the fact that it, by January, looked pretty late stage to me, based on history, that it would break in a few weeks. So I'm not really expecting that I will get to May the 1st when I could sell some of this. I think it's quite likely that the bubble will break before that. As I say, that was one of the great ironies of my life. And of course, QuantumScape then turned down from 110 to the day before yesterday, 44, which is the biggest wipeout of theoretical wealth, paper wealth, that I have ever had by a multiple of perhaps 10. So I've been theoretically writing a little story about how I came to love irony around QuantumScape. But when you think, here's a company that, it's a brilliant company, but it makes no bones about the fact there's 4 years to wait. And at 110, it was selling for more than the market value of General Motors or Panasonic, to take a battery company. Not bad, eh? The kind of old pros on bubbles, we have telephone calls with each other and we argue about, is this worse than the tech bubble of 2000, the internet bubble, if you will? And it used to be in the summer that some of us thought it wasn't quite and some of us thought it was. But pretty much now, we all think it's every bit as bad as 2000 and maybe even more impressive. 2000 was in a league of its own. It blew through 1929. So 1929 was a genuine impressive bubble. And they have many characteristics, but one of which is they turn on the afterburners for the last few months. And they start to rise at least twice the rate of the entire bull market since the previous real low And 1929 certainly was doing that. 1928 and 29 was just a warp drive move. And 98, 99 was, particularly for the NASDAQ, kind of doubled in the last half year of 99. And here we are, where the NASDAQ is up about 100% since March. So that's very impressive, more than enough to make the cut. And the Russell 2000's up 110%. And the other characteristics are that you've got to have more and more interest in the market. You've got to have the market kind of go from the finance page to the front page. You've got to have crazy stories becoming part of the cocktail party conversation. And we certainly did in 2000. My joke then was at the Greasy Spoon lunch place that we used to go, all those 8 television sets that used to be showing reruns of the Red Sox were talking heads, MSNBC giving us the latest pet.coms. And that hadn't happened, by the way, throughout the long 11-year bull market. And there was a little flurry in late 17, early 18, which fizzled out and began to get some of the excitement, but it never got the quantity or the quality. But this time it has. This time it's become a real storyline. And the news talks about it and the front page talks about it, and one story after another. Electric trucks that have to be pushed downhill to take the photograph. And Tesla becoming worth more than the next 9 global auto companies added together. And Musk, who of course is a genius, but nevertheless, rapidly becoming the richest person in the world, when a mere 5 years ago, he was sleeping on the factory floor wondering whether he was going to go bankrupt. It's all terrific stuff. A bubble that has escaped all but the most serious aficionados of bubbles, and that was 1968, 69, where tiny stocks went crazy like they are today. I was out of business school, and I was in the dopey general management consulting, and I asked around who of my classmates were having the most fun, and by far that was the investment business. And so I jumped ship and joined a mutual fund group in Boston. And we used to meet for lunch. And these guys were already a critical year or so ahead of me in the business. So I sat there listening to them, and they would trade these kind of little rocket ship stocks that would go up 5 or 10 times in a few months and then kind of explode and disappear. And it didn't seem to faze them at all. They just considered anyone who got stuck in the exploding part were just nitwits. And after a few months, to be exact, 3 months after I got in the business, I was going to go off with my wife for 3 weeks holiday in Europe to see our families in England and Germany. And we loved the story of the week before we left, which was American Raceways. American Raceways had the world champion race driver Sterling Moss on its board, and it was going to introduce Formula One Grand Prix racing to America. It's always been a kind of European, South American thing, but it never has really caught on in the US. But it was kind of power and danger and noise. It sounded to me very, very American. How could it miss? And it opened one track, and it did brilliantly well because it was a novelty, of course. What did we know? We thought it was going to happen every time we had a race, and it was going to be duplicated in 12 different places in America. Anyway, I bought 300 shares at 7 and went on my holiday. And when I came back, it was 21, which was kind of typical. And I was thrilled. And so I did what any good value manager would do. I sold everything else I had and doubled up. Okay. And it was 100 by Christmas, and I was rich. That was enough to buy a house in Newton, a Victorian house next to an orchard with a BMW, only they turned down our bid. And so we didn't buy the house. And early in 69, as my rocket ship descended, I jumped ship into another one, and that blew up, and the next one blew up, and I was back where I started from with $3,000 or $4,000 left, licking my wounds. Anyway, so that was a thoroughly exciting and thoroughly dense learning experience. And it had a lot to do with me being a more cautious investor for the rest of my career.